Is rupees 20 becoming the new rupees 10? When the senior category head Parle Products gave this surprising statement, many people wondered. Is Parle moving away from rupees 5 and rupees 10 price points? For years, these small sachets have been the go-to entry price points for FMCG companies. But with rising cost and inflation, it's getting harder for companies to offer these small packs. And the data supports the situation. Currently, rupees 20 price points contribute 12 to 14% to food companies' sales. But in just the next 3-4 years, this is expected to shoot up to 25%. Does that mean the rupees 5 and rupees 10 price points are disappearing? Not really. In fact, the senior category head Parle Products himself gave a counter-argument. Rupees 5 and rupees 10 price points are sacrosanct. We may reduce the weight of the sachet but will not vacate these price points. Parle G used to sell a 250-gram pack for rupees 10. Today, that same pack weighs just 110 grams. 56% less, but they are still holding on to that rupees 10 tag. This isn't just Parle. Nestle tried raising its rupees 10 Maggi pack to rupees 14, but its sales tanked. Immediately, they had to reintroduce the rupees 10 pack with a 60% reduction in weight from 100 grams to 40 grams. So why won't FMCG companies leave the small sachet space? The answer is simple: consumer loyalty. When prices rise, especially in rural and semi-urban markets, consumers react fast. Nestle's sale decline proved just how sensitive the market is. FMCG companies can't afford to lose the trust small sachets drive volume. They account for 25 to 75% of sales across various FMCG categories. In some segments like pan masala and shampoo, that figure can even soar to 80 to 90%. While inflation and input costs are squeezing margins, FMCG companies will continue bearing some of these costs. Why? To keep their loyal customers happy and prevent backlash. So while rupees 20 might be becoming the new rupees 10 in terms of weight, the rupees 10 pack isn't going anywhere. Let's also look at how the FMCG sector has performed compared to benchmark indices in the last 5 years. Nifty FMCG has delivered 89.10% returns, slightly trailing behind Nifty 50's 107%. But CRISIL projects FMCG companies' revenue to grow by 7 to 9% in financial year 25. What's fueling this growth? The rise of e-commerce and quick commerce, driving consumptions to new highs. Hence, the FMCG sector is gearing up for a major leap forward. What do you think? Will small sachet become a thing of the past? Or will FMCG companies continue to shrink the size of the packet while still keeping the rupees 5 and rupees 10 sachets going? Let us know in comments.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.